There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice. Brought to you by TackleTrading.com.
Welcome out to the Trading Justice Podcast presented by Tackle Trading. If you're interested in learning about the financial markets, want to become more informed about what's going on out there in the world from a debt crisis, from a stock market perspective, what's happening in China, what's happening in Europe, what's happening in the U.S. marketplace, go out there to TackleTrading.com. Sign up for a pro membership. Go get Gino Poor's options report, my Matt Justice's Forex report, Tim's commodities report, and Noah Davidson's stock report. Changing lives one trade at a time over there at TackleTrading.com. But this is the Trading Justice Podcast, and we got one of our renowned guests out there, Dean Beckette. Dean Beckette is here with us. Dean, you've been on the podcast a few different times in the past, and I obviously have my cohort and co-host Tim Justice, my trading partner for the better part of the last 10 years. Tim, did you know that this is our 10-year anniversary of when we joined Rich Dad? It's fine.
I think it's yours.
Yeah, yours
Mine
was a
last
month before
month.
me. Okay, mine is September of 05, and this is my 10-year anniversary. Yours was last month. Before we get into kind of the topics at hand, just give me one thought on what has it meant to you to be a part of this amazing community for the better part of the last decade?
It's incredible. You know, the one thing that I am even more and more impressed by over the years is the dynamic group of entrepreneurs. You know, we work with traders mostly. We've worked with, and even within the traders, you know, option traders, Forex traders, futures traders, all kinds of different backgrounds there. It's been incredible. But also the tax professionals, Matt, or, you know, people who do liens or they deal with credit or whatever it is. I mean, just the dynamic group of entrepreneurs is really, really awesome to be around. Because as a trader, when I started this stuff, I would sit and trade for 10, 12 hours if I wanted to, you know.
Mm-hmm.
And most anymore, I don't do that. And that's because I have a different mindset, you know, and that impression has come from a lot of that spirit that Robert Kiyosaki instills in his community.
Yeah, you know, I like to think like back when we first started trading, we would be just stuck to the computer for 10 hours a day. And then we started teaching other people how to do it. And, you know, I at my events for Legacy and Rich Dad, I basically say, you know what, guys, you don't need to be in front of the market 10 hours a day. I've been there. I've done that. I have the scars. I got the merit badge. Any way you want to put that, I've earned that. Today, you know, I want to spend 30, 45 minutes in the market. You know, I want to make my trades. If I have nothing better to do, I'll scalp the market if I'm bored. But I just want to make my trades. I want to go build businesses, you know. I want to make my investments. You can be so efficient in the market. But, you know, I've been reminiscing a lot lately over the last month or so. The tens of thousands of people we have taught along the way, Tim, the countless lives that have been changed for the better. People like our guest here, Dean Beckette, you know, your mentor, Hall of Famer, Steve Wong, you know, Jake Pelly, Craig George, Rena Haffitz, Solon Stefano, you know, just to rattle off a couple off the top of my head. And we still today gonna meet every you know, people every single week to, you know, hopefully give them a message that changes their lives and gives them hope for a better day. And I especially been reminiscing where we're at right now in the marketplace. You know, back in 08, you and I were just pup traders and pup teachers. You know, we weren't really nothing special, to be honest with you. We were just getting into all this. You know, now we're 7 years later. We're at another top of a market. You know, and I feel so grateful that we've had the last 7 years with such amazing people. You know, people at Rich Dad, people at Legacy Education, people at Tackle Trading like Noah Davidson and Gino Poor, you know, people like Ian at Legacy, you know, people like, the Andy Tanners and the Scott Stewarts of the world, and the Jeff Crystals and the Keith King, love Keith King, people like that, Micah Brooks, Tyler Craig, Mike Kleinhans, people that are amazing, amazing, amazing people, that are not only great traders and great educators, but just great people, people who believe in service. And it's been such a pleasure. It's been such an honor. I mean, Tim, I constantly come back to this, but there's only one reason you and I are successful, and that is because we made a decision 10 years ago to surround ourselves, and we might not even have known it at the time, but we made a decision to surround ourselves with those people. And the people at Rich Dad, people at Legacy, Robert and Kim Kiyosaki, Blair Singer, and so many other people that have inspired us and have led us, have molded us into who we are, and we are successful, because of them. There's so many people that in life today, they try to do it on their own, and these people gave us a different vision, that we could do it together. And that's what we preach over there at Legacy. That's what we're creating at Tackle, a sense of community. And I think people out there are fed up. They're frustrated. They're frustrated with the national economy. They're frustrated with government. They're frustrated with Wall Street. And it's not just here in the U.S., Tim. We have students around the world. We have students in every continent not named Antarctica. And everybody is the same. Everybody has the same desires. Everybody wants to be a good person, a good father, a good mother, a good community servant. They want more knowledge. They want a better life. And they're willing to work to get it. And it's so inspiring to see people make that decision to change their lives on a daily, a weekly, a monthly, a yearly basis. It truly has been an honor to be a part of this. And it's one of the funnest things that we do here is the podcast, though, and it's our way of letting loose a little bit. It's our way of showing our personalities to a certain extent, and it's our way of giving another channel, another vehicle where people can get the knowledge they need and hopefully be entertained and have some fun along the way. So we're going to have a good time today in the podcast, ladies and gentlemen. We got a lot to talk about with Dean and Tim. Producer Phil is, as always, here to produce the podcast and keep us on track. We're going to talk about what's happening in the financial markets right now, what's going on with bear markets. We're going to talk about how, multiple time frames on the market. A ridiculous consumer confidence number, in my estimation, today came out. We're going to talk about what that is and why it represents. We're going to get into the Carl Icahn video a little bit and what's happening in the commodities market with a massive, massive company called Glencore potentially having a Lehman Brothers moment just earlier this week. So first thing I want to get is I want to bring in Dean. And Dean, you are, I don't want to say you're a perma bear, but you are a bearish trader right now. Would you agree with that?
Yeah. I wouldn't call myself a perma bear. I try to follow the market as best as I can. Trade with strength.
Yeah. Well, the reason I say that is I do believe every day on Twitter I see at least 5 or 19 tweets from you saying, "Go to hell, S&P, go to hell." And I could just see you yelling at your screen, "Go down, go down, go down." It's hilarious. Dean, very quickly, about trading and technical analysis in general. Why is it that you are so bearish on the market?
Well, right now? It's exactly that. Technical analysis is telling me that this is one of those moments when people, I think, should be fearful instead of greedy. And because I look at the SPX and the Dow and the NASDAQ and the Russell. Those are the things that I kind of gauge the health of the U.S. stock market, if you will. And I'm looking at the SPX right now. There's a death cross that crossed on 828 going to the Dow. That crossed on 811 going to the Russell. That crossed on 9-1, and the NASDAQ is the newest member because that just crossed, 3 days ago, 4 days ago, 925. So I look at those technical signals of the 200-day moving average crossing above the 50 and the 20-day moving average, and the fact that the 20-day and the 50-day moving average are pointing pretty much down. It tells me that this is not a market that anybody should be buying unless they're buying puts.
Okay, now I do believe Peter Schiff, Carl Icahn, George Soros would agree with you. Especially from a hedging perspective, an insurance perspective on long-term investments. The problem with everything like that, because you and I will trade it, Tim will trade it, but there's a lot of people out there with significant money in the markets that are not doing anything about it. And what they need to do about it, and what we've been telling people to do about it for 6 to 8 months, is get a hedge, get protection, because the longer you wait, the more expensive the hedge becomes. And right now, hedging your long-term retirement accounts is very expensive because, like you said, the value of put options. When you buy a put option, and the markets go down, those put options go up in value, which means the more you wait, the longer you wait, the more expensive those put options become. Tim, I want to talk to you about your take. Everybody knows I'm also bearish on the market right now. I have a slightly bearish bias on the market. If the market does break, somewhere around 1850, I'll probably get a little bit more bearish. But what about your take on it? I know you did some analysis with your classes yesterday where you literally analyzed every stock in the S&P 100, and you looked at it from a multiple time frame perspective. And what was after the end of your research in terms of charting all of those stocks? What did you
Well, it's
find?
interesting, Matt, because one thing I firmly believe in life, not just in markets, but politics and everything else. I mean, if you're going to have a real firm opinion, like, for example, the market's going to drop or the market's going to rally or whatever it is, I believe that you should be able to make the other side of the argument. I come from a political science background. I come from a debate, instinct in my life. I like to debate issues. I always have. And I always found it really troubling when somebody was taking such a strong position, but they couldn't even understand why the other person felt the way they did. So I have that mindset, and I decided to myself, well, Tim, you're just way too bearish right now. I mean, I'm with you guys, believe me. I mean, most everything I was seeing, death cross, reversal, this and that, and I was having a really hard time over the weekend coming up with the bullish argument. So I decided, I'm going to try to make it, and I'm going to try to go out there and find it. And the first thing I did was I started with charting, because technical analysis really does tell you a lot. And one of the first things with technical analysis that you should ever do is change time frame. And that includes the daily, the intraday, the weekly, the long-term charts. And I decided to stick the top 100 stocks in our market on a 20-year chart, just to look at the big picture. And I was left with two disturbing feelings, Matt. One is a lot of stocks look like just a great uptrend. Any technical book would tell you, hey, that's just a great pullback, good retracement. I think it was 80 or 90% of the top 100 stocks in the S&P are still in a long-term, multi-year uptrend. And that other feeling came then after that, thinking, well, if the market truly is going to go through a corrective phase, that means we got a long way to come down as well. So it did leave me still mixed, but I got to say, to be fair, the charts from the biggest picture time frame, they actually still look pretty decent, and they look pretty strong.
Right now, the S&P 500 is in a 23% retracement off its previous movement from 2011 to currently 2015. Now, that's the last time we had some type of corrective retracement was the European debt crisis that came out in the summer of 2011. So I mean, when you think about it, a lot of the S&P 500 itself is only down 23. It's only in a 23% retracement. We're down about 10% off the highs. Nothing too crazy so far, but I will say this. When you're talking about the long-term uptrend still being intact, I agree to a certain extent that, when you look on those monthly charts, that they still look fairly decent. However, when you track on the daily charts, Tim, you have currently right now in the entire marketplace, not just the S&P 500, there are 78.3% of stocks that are underneath its 200-day moving average. You only have 21% above its 200-day moving average. There's 81% of stocks underneath its 50-day moving average. All 20-day moving averages are crossing underneath the 50 and the 200-day moving averages. And I like what you said, where you said, I had a hard time making that bullish argument, so I went out there and I, did some research from the bullish standpoint. I also come from that debate background, obviously, the political science background and so on and so forth. And Tim, I was talking to my daughter just yesterday, and my 17-year-old daughter, who is smart as a whip, she's very intelligent, but she's very, very opinionated. And she made a statement about something.
I wonder where she gets that from, by the way.
Probably her mother. But she makes this statement, very opinionated, very, this is what it is. And I started, and I agreed with her premise. Okay, I agreed with her premise, but I said at the end of it, I just started taking the contrarian viewpoint. This is the contrarian viewpoint. I didn't tell her I was doing it. I just started arguing. I started peppering her with questions, and she couldn't answer them. And at the end of it, I just said, take a listen. Whether I agree with you or whether I don't doesn't matter. It's the fact that you cannot argue the other side of the equation. If you truly want to have that opinion, and you want to be right to such a degree that you are so sold on this opinion, you have to understand the opposite end of it. You have to put yourself in a position to understand that opposite end of it, because if you don't, then you're just the same way as everybody else. You have to take that contrarian view to a certain extent. And I look at this right now, and I'm looking at the marketplace, and I'll be honest, I have a hard time making the bullish argument right now. I look at the economic stats out there, and they do not support a bullish market right now. I look at the global market crisis, the debt crisis. We're currently, just to give you a couple stats here, Tim, okay, just in the last 6 years, we have expanded the debt in the world by $58 trillion. We are currently $200 trillion in debt right now. One of the only reasons the market has been supported in the world over the course of the last 5-6 years is because all of the money that has been printed in the debt expansion. You have countries that are 400 times more in debt than their GDP. And I'm not even talking about Greece. I'm talking about Japan. You have the United States, which is 250 times in debt more than their GDP. When you take into account all debt in the U.S. Well, but that's my point. You've had the U.S. $4.7 trillion.
So far.
Well, but the problem is, and again, from an economics perspective, I'm trying to make the argument here that the markets continue to move up, and I'm looking at them like, how in the world are you going to continue to move up unless you have two more things happen, unless you have further expansion of debt, driving stock buyback programs, mergers and acquisitions, business ventures, and unless you have the expansion of the quantitative easing policies in the world, whether it's out of Japan, the U.S., or whether it's out of the European zone. And now we're looking at the Fed possibly raising rates, which I'm still not sold on the fact that they will. When they didn't raise rates in September, I honestly, I don't know if they're going to raise them, guys. I don't know if they can. I don't know if you can raise the rates as the market is 20-30% down.
See, and that's another part of this debate I keep having, Matt, right there, is that I'm starting to come to the conclusion that a lot of traders out there are coming to that the Fed is full of shit and that they aren't going to raise rates. And that all of this talk for years about raising rates, they've always in the back of their mind known, well, we don't have to, and we're going to wait. Well, I don't even think it's out of the realm of possibility to see a negative interest rate environment. I think globally, the economic system we're in, they want to discourage people from saving. And you had a consumer confidence number came out today. People are fully happy buying stuff right now. They are out there spending. So it's interesting to look at that and that environment.
We'll talk about that consumer confidence number in a second. I want to get Dean's take on what both of us just said.
Well, I would actually fully agree that, finding the bullish case is key to understanding, I think, this market, or really just any market, finding the opposite case is the key to understanding your the strength of your position. In any argument, especially with the one you were talking about with your daughter there, that well, look, if you can't even talk about the other side with the idea that you understand their viewpoint, then having an argument is moot about it, actually. and and then the thing that Tim and I and the rest of the trading lab in yesterday's trading lab that we were talking about on that, looking at the uptrend of the stocks, the major stocks that were making up the sector spiders, and there were several of them that when we looked at them, the long-term value was well over the 2008 or 2007 high, and in some cases was almost as high as the 2001 high. And so we're going, oh my God, this is ridiculous. Why is
Let's take a couple
notice
examples.
this?
Let's take a couple examples of that yesterday.
Here in some
Okay, so Tim, let's take a couple examples of that research from yesterday. So in your research yesterday, what are a couple stocks that you noticed that were still in solid uptrends, that were, in your estimation, still look fairly good from a long-term perspective?
Well, you got to look at stocks like Amazon and Google and those that are leading the market charge. Amazon is a great example because of the value and because it's going to bring up a great debate. What do you look at, charts or valuation? Because I want you to look at the PE ratio on Amazon, Matt. The chart is incredible. Facebook was incredible, has a great chart, but you worry about this huge run-up they've had for the last few years, obviously. That's where the debate comes back.
Yeah, I'm going to that monthly chart on Amazon. If I look at where the valuation was in the 2008 crash, Amazon, okay, 2007, here it is. There's October right there. I'm looking at a value of 86.78 on Amazon. And now we peaked at $580.57. That's like $400 higher or $500 higher. I mean, that's just absolutely out of control.
Well, let's talk about Amazon right now. Amazon's long-term trends are still bullish. There's absolutely no doubt about it. It's got higher highs. It's got just in its current run. This year, just in its current run, it's up about from $300 to $500 right now. It reached a high at about $580. It's already came back down about $80. When you look at the daily charts here on Amazon and you're tracking just this retracement here, it looks like a solid retracement back down to support. It's starting to slow its momentum. You track it for the last 3 months, Amazon is practically neutral from the daily chart, and that's why multiple time frames will give you a different picture. The daily chart doesn't look that great. Weekly chart looks really good. Monthly chart looks really good as well. The problem with Amazon that I personally have is Amazon is, and again, coming back to the bullish argument on Amazon is completely technically driven. It's not fundamentally driven because we don't even know what Amazon's PE ratio is because they never show earnings. This is an example that dates back to the 1990s, where you had these massive tech companies who, were basically debt-driven companies and didn't show actual revenues, didn't show an expansion of economic value. And so, yeah, Amazon has went up from $80 to $580, back down to $500 this year. It's went from $300 to now $500. It's had a ridiculous expansion. But what economic value does Amazon bring to the U.S. economy? What economic value does all this does is make the rich who have been investing in Amazon, because the only people that invest in Amazon are people that have millions and millions and millions, if not billions of dollars. I'm talking about institutions and hedge funds, because it's so far out of price that the normal mom and pop, the normal investor can't even touch this. And so it's basically made rich richer, and it's done nothing to improve the economic value. And so I look at companies like Amazon, and I certainly see a bullish case from a technical analysis perspective, but I also see I also see the Amazon specifically as part of the problem, that is impacting here in the world where we are just a debt-driven society.
Totally.
Right.
I
I
don't.
agree with that, but here's the thing: is if you're going to live in a world where they discourage savings, Matt, and where they're going to keep interest so low, there's no real reason for you to keep the money. You're out there buying, you're buying. Who benefits more than a consumer-driven company that can eventually just get you a product from one of those drones to drop on your front doorstep? I'll tell you who
Those
Amazon
drones ever come to
benefits.
my house, I'm going to shoot them down.
That's funny. I've heard it. There's been a bunch of stories in the news about that lately. Whether you have the right to control the airspace above you. I know a guy in my neighborhood that has a BB gun shooter, and there's this one drone that flies around the neighborhood. He says the very second it comes over his house, he's shooting it down. And I believe him.
Listen, you know what? We know a lot of people from the backwoods of Emory County, Utah, central Utah, that if drones start popping up over there, they're not pulling out their BB gun, Tim.
Well,
The thing is, after about 70, 80 feet, the airspace is open. So unless you can provide proof that a drone is actually like spying on your property, you're like over your backyard even. You have no guarantee of privacy unless you're like in the backwoods, as you say. If you're if you're outside, if you're in your house and like you can see the drone and it's looking like it's looking in, then that's a different story. You still don't get to blow it up though.
Hey Phil, you know that the people of Emory County don't care about anything you just said.
So they like going to jail then. Good to know.
Oh, you honestly think the cops are going to arrest somebody in Emory County, Utah? They're probably the ones leading the charge of shooting down the drones. Right. I mean, I'm telling you, and I don't blame them. If somebody comes around my property, I don't care if it's Amazon. I don't care what the law says. It's not going to happen. It's not going to happen. So I get your point, though. Okay, another company that's been doing very, very well in this really nasty market is Nike. Nike released his earnings last week. Nike reports a very good earnings report. Nike, in a very depressed market environment, gaps from 115 to 125. Now it's starting to retrace back down, but Nike's trend is still very much intact, and this is a potential buying opportunity. And so, and the reason I bring up Nike is, I look at Amazon, its long-term trends are still intact.
Sports.
I look at Nike, and to me, I'd rather put my money in something like a Nike than I would something like an Amazon. That's just me.
It makes total
I
sense,
understand,
though.
but they're both consumer-driven companies. I mean, we're still talking about the same problem. We're still talking about the same issue, and it does bring us back.
But you know what the difference between Nike and Amazon is, though? Nike has a PE ratio. They actually show earnings. That does mean something to me.
Sweatshops in China, but
they have those too. I mean, they absolutely have those too, and Amazon services those sweatshops in China. But I mean, if we can't invest in any company that doesn't have a sweatshop in China in these days, I mean, what company are we going to go to?
I'm a huge believer in shorting Halliburton every chance I get. I don't know if I believe in ethical investing completely like some people do, but because I think you should make money. It's your job to make money as a trader, going up, going down. I know people that won't invest in Monsanto and some of these other companies because they don't agree with what they do. But
I had a student from just this past weekend, a great kid, a 27-year-old kid, awesome kid, great mindset. He joined us. He's learning how to trade. And his thing was, I just want to invest in companies I believe in. But yet the only companies we really believed in were solar energy companies and alternative energy companies. And I was like, well, I admire your courage for investing in companies that you believe in. The problem is you've been losing a lot of money on those companies, because they're all going down. Because he'd be like I like 8 alternative energy companies, and I'm like, well, that's fantastic, but if one goes down, they all go down. But coming back to the bear market and making and kind of understanding the bullish reason versus the bearish reason. The only way I could support another bull run in this market is if the Fed goes to a negative interest rate and they pump in another $4 trillion.
Don't you always say don't fight the Fed? I mean,
you don't fight the Fed. They're assholes, but you don't fight them.
Don't you always say don't fight the Fed, right? So if they go negative interest rate, Matt, I don't know what you do. I think you got to step back, obviously shorten up time frames, but if it starts going back up, you got to play the trend.
Yeah, you absolutely do. You absolutely do. And if the Fed goes negative interest rates and further quantitative easing, short the United States dollar with every dime you have. That's what you do. You short the United States dollar and you buy the stock with it. You buy commodities, you short the dollar, and you buy stock. In every market environment, regardless of what they do, you can find a great strategy. The problem we have right now is the fact that the Fed is a bunch of blowhards that nobody trusts right now. And that the market has proven that over the last 2 weeks. When the Fed didn't lower interest rates, everybody in the market came out and said the exact same thing. At what point in our economic system is the economy going to be well enough for the Fed to justify interest rates? I mean, we're talking the last time we raised interest rates was 2006. We're 9 years into this run, and from lowered interest rates, from a raise in interest rates, the last time we lowered interest rates was 2008. We're 9 and 6 years from the time the Fed has done anything. We've had 6 years of data watching by the Fed, and it's like, okay, at what point is the Fed going to raise rates? At what point is the Fed going to say that the U.S. economy is good enough to raise rates? I mean, it's like they're admitting the only reason the market has went up is because of their massive manipulation. And you look at an October increase, that's not going to happen in October. They don't even have a press conference scheduled for the October meeting. You have December, which is the lightest traded month in the stock market. And most Wall Street traders are on their vacations in the Bahamas, but they're not trading, so you have the lightest traded month. Are they really going to raise rates in the lightest traded month? Which means you're looking out to probably first to second quarter of next year before you could ever raise a rate. And if the world economy and the world markets continue to go down, the U.S. markets will follow that right now, and are the Fed, even at that, looking back out to April, if the markets are 20, 30, 40% down at that point, do you really see the Fed raising rates in that environment? Absolutely not, which means you're going through another negative interest rate. The biggest problem in the stock market right now is the Fed. If the Fed didn't exist, we would not be going through this massive problems. They're the one who's created these bubbles. And so I'm looking at this and I'm saying, to me, the next 6 months in the market are going to be very volatile. You're going to have whipsaw up and down, obviously. I see obviously more negative movement in the market than I see positive movement. But if the Fed starts going to negative interest rates next year, if they start going to more quantitative easing next year instead of raising rates, that is a telltale sign that the U.S. economy has failed, that the debt-driven society that the Fed has encouraged over the course of the last 7, 8, 9, 10 years has failed. It means the Fed has failed, and it means the world central banks have failed. And at some point, consumers will wake up to that.
I'll take issue with you on all that, by the way, because I will say this. What's one of the greatest books in political philosophy history? Niccolo Machiavelli, right?
Okay. Yes.
The Prince. The idea that the Fed is full of a bunch of buffoons, I'm not sure I can agree with that.
I didn't say that. I said their policies have failed. Yes. Do I think they're blowhards and assholes and horrible people that are manipulating the markets and the economy? Absolutely. I didn't say they were dumb people. I said their policies have failed. If they lower interest rates without an increase over the last 9 years, 10 going into next year, it has been proven, in my estimation, that the Fed has failed in their mandate.
Maybe, but not maybe in their strategy. See, I don't know what their goal is, Matt. mean, can you even tell me for sure what the
They
group
have a
of
dual mandate.
central
They
bankers'
have a
goals are?
They have a dual mandate. That all I can tell you is what they tell us. They have a dual mandate. Number one is to increase inflation. They say that we live in a deflationary environment. I think they're full of shit. I have never met a person in the last 5 years who has had a decrease in the cost of living unless it was personally chosen because they're not making enough money. Okay? We live in an inflationary environment. Costs don't go down, they go up. Yeah, what they track, their numbers, which are not accurate. Yeah, so number one is they want to spark inflation. You know who else has said that for 30 straight years, Tim? The Japanese. They've said that for 30 straight years, that they will do whatever it takes to spark inflation. And yet they've went through 30 years of economic stagnation. Back in the 1980s, the Japanese yen was prone to take over the United States dollar as the reserve currency until they started printing enough yen that it sparked the yen going up to now currently 120 yen per U.S. dollar, and yet they've never been able to spark inflation in their estimation. Okay, that's number one. And number two, unemployment. They want a labor force that is strong. However, with what you're doing right now, okay, what has happened is, and you know this as well as I do. Do you remember 4 years ago when the Fed was telling us that they'll raise rates when unemployment gets down to 6.5%? And then they said they're going to raise rates when it gets down to 6%. And then they said they're going to raise rates when it gets down to 5%. Well, we've crossed those thresholds. We've crossed those thresholds, and the Fed is still not raising rates. So in terms of this dual mandate, I'm looking at this and I'm saying, well, at what point is employment in the labor market going to be strong enough? Because the reality is the Fed knows the labor market at 5.1% is a sham. They know 6.1 million Americans by the ages of 55 to 69 have had to go back to the labor market because they have discouraged saving. They have literally created a bubble in our baby boomer generation, the number 2 savers generation in the world today. They have killed their retirement plans through low interest rates. They have basically forced baby boomers to go back to the labor market so that the rich on Wall Street could get more money. In terms and you know what this has created? This low interest, it is this thirst for yield. It's this thirst for yield to where they can't go to a traditional bond market, so they go to junk bonds. It's this thirst for companies out there in America today who can't afford stock buyback programs, so they go into debt and sell bonds on their stock so that they can go afford more stock buyback programs. That is what this entire Fed-driven bubble has created. It's created a market valuation that makes no sense. It's created an economic situation where baby boomers are destroyed from a saver's perspective. They're forced to go back into the market, and companies in America from the ages of 24 to 55, which is your core spending generation, these companies in America today are laying off those people because they're too expensive to provide work for, so they outsource to China and Malaysia and the Philippines and cheaper labor environments, all in the name of low interest rates and cheap cost. They've created the environment that they despise. They've created the environment that they now just say we have to do this thing over and over again just to see if we can get out of what we created in the first place. And it's like, and the thing I'm glad that the market's sold.
Maybe they're doing that on purpose. Maybe they didn't
they
fail their
are.
strategy.
No, see,
the whole point is it may not be about their mandate. We're sitting here trying to say that they failed because they didn't fulfill their mandate. I mean, are we that naive to believe that their goal in life is to fulfill what Congress told them to do?
If you believe what you just said, you think these assholes are worse than I do. Okay, if you actually believe what you just said, you think these are these are 16 of the worst human beings in the history of mankind. That's what you are telling me if you believe what you just said. Because if they are creating this to create the bubble on purpose, if they are doing this to manipulate price action on purpose, then they are some of the biggest criminals in American history. And and I've said this before, if this was 250 years ago, Thomas Jefferson and George Washington and James Madison would be leading the charge to exile them from America.
No, if it was 250 years ago, these guys would be Thomas Jefferson. Are you kidding?
Hell no. You do not mistake Janet Yellen and Ben Bernanke and Alan Greenspan, a bunch of neoliberal, insane people, as some of the greatest Americans of all time. That's ridiculous.
Who do you think the founders were?
They were the Wall Street corporate America type.
Aristocratic elites that owned land and property and power that came up with policies to put people into subjugation. That's who the founders were.
And yet you're absolutely right. You were absolutely right. They were the corporate America icons. That's who they were. They were not the central banks manipulating the policy to make these things easier. The founding fathers were classic liberals. They were Adam Smith capitalists. No, they did not. The central bank was not created until 1913. In fact, Thomas Jefferson stated that one of the greatest threats to society as a whole is a central banking processing system. The central bank wasn't created until 1913 by the
Treasury, wasn't he?
The Rothschilds.
Isn't that what he did?
Alexander Hamilton wanted to create a central bank. He's the only asshole in the founders that actually wanted to do that. He's the only one. He got voted down.
Dean, comment.
Oh, Lord.
Comment, I guess, just getting back to the kind of the debt issue, because that's the thing right now that makes me the most fearful, is the fact that our debt worldwide is really out of control, and I don't see any chance of that slowing or stopping in an environment where the Fed in our country is afraid to raise rates, it appears now, and that's part of the reason why I think that's spooked the market. You've got in emerging markets and developing markets around the world, I'm talking about Russia, China, India, all of the BRICS are, they're depressed in their economies, and oh gee, we have the start of people doing saber rattling because they're trying to drum up nationalism so that they can remain in power. I'm talking about Nicolas Maduro and Vladimir Putin. Both of those guys are just as criminal as the central bank, if you want to talk about that, because they're just saying, look over here, look at the silly furry monkey. Oh, we have this mountain of debt over here, but look at the silly furry monkey, because the silly furry monkey is cute.
Yeah, but Dean, you know what Vladimir Putin knows and why he's a genius? Is all he has to tell to consumers in the world is to look at the cute little furry monkey, and all of a sudden, oh, so cute, and they don't even wake up to what is going on. But I will tell you what a cure is, Dean, because I'll take a little bit of challenge on this. You know what the cure is? What is the debt priced in? What is the majority of the debt in the world priced in?
Right.
In the dollar. So how do you get rid of debt if it's priced in dollars? If there's not the money to actually pay down the debt?
You start a war with the country that owns your debt, I guess.
Well, I do not see that happening because you can't fight everybody, but you kill the dollar. That's what you do. You kill the dollar.
Yeah, that's what I don't think that he, as in Putin, has the ability to do that right now.
No.
Before,
do you know who does?
Down, I think he had a chance.
Do you know
but
who
now,
does have the ability to kill the dollar, though? Janet Yellen. Janet Yellen does.
Oh.
Okay, why do you
China and sure.
So it's just this asinine belief of throwing money at a money issue. It's the same. I look at Mexico in the 70s. I look at Russia in 1990, 1999. I look at Russia in December of 2014. I look at the Weimar Republic of 1919 to 1923. I look at 75 to 100 examples in the last 100 years alone where you've had these massive debt problems. And one of the only ways people got out of the debt is to kill the currency. You look at the Japanese right now over the last 30 years. They have a 400 to 1 debt to income ratio. The only way they're going to get out of that ever is to kill the yen. The only way we'll get out of debt is to kill the dollar. And the only people these people at the central bank care about is the people that will be protected, and that is the people that own property, people that own commodities, and people that don't have everything allocated in U.S. dollars. They don't care about the people in America, and the people need to wise up to that. Okay, whether Tim is right or I'm right, or whether we agree or disagree, I think we'll both agree of one principle, Tim. The Fed doesn't give a shit about the average American person.
Oh, I think that if I can try to support anything I've said today, I have to agree with that for sure. So the reality is, well, I mean, how can they, Matt? I don't think that that's a world that they live in to where they're really that concerned about that kind of thing.
They're so
they manipulate
disconnected.
rates. Come on. I mean, we've known people like this in our life. I don't think that they really care whether or not mom and pop has to go back and work at Walmart in Oklahoma. And that is the tragedy in the current economy, in my opinion. This great generation, which is my parents' generation and your parents' generation, is now become kind of shills for this economic instability.
Listen,
and it really goes back to what Rob
Tim,
taught.
It is that greatest generation that has provided us the most personal freedoms that we cherish today. And we treat that generation like nothing. We treat that generation like they're like literally nothing. I don't know why 0% interest is the only catalyst that the Fed has. I don't understand why they feel that an increase in interest rates is a bad thing. It means that the savers out there will actually make an interest on them. It means that people can go back and buy bonds again. I mean, from 1982 until 2007, before the Fed destroyed the bond market outpaced the stock market historically, 11% to 8%. In any time of economic crisis or monetary crisis, you could go buy American debt and get an interest on it. You could go save money, and the money market account would give you some type of interest. Today, what is the only, and this is what I want to come back to, what is the only thing that people can do outside of traders? I'm not talking about us, guys. We can trade the market. We can short the dollar. We can go get our yield. We can do whatever we want. Okay, we're different than the average American citizen. So what is the average American citizen, which represents 95% of the entire populace, what are they supposed to do outside spend all their money when it comes to planning for retirement? Because every dollar they save in their retirement accounts, guys, is cheaper in the future. Every dollar they save in savings, doesn't buy the same amount of goods in the future. And so what can these people do in such an environment that is so manipulated, that they are so disconnected, they are so disenfranchised to a certain extent? Where can they go to have a better financial future? Where can they go to get an interest rate that is not so insanely risky that they're going to blow up accounts? What can they do?
Well, in terms of making money passively from the market, I don't know if that's an environment that you want to move into, Matt. I was talking about this with my wife on the way back from a drive we had down to southern Utah about 2 months ago before the market crashed. And I said, honey, I'm really worried about the stock market. You know, I know your dad, he doesn't really like to ever do anything. He's a very passive investor, and he's old school. He's trained that way. I said, but you might want to talk to him to at least talk to his guy and make sure he understands where his risks are and all that kind of stuff. Because Raji's pretty laid back, you know. And and he's done well in his life. You know, it's hard, and this is something that you and I know. It's hard to tell somebody who's had success that they're doing something wrong. And so you want to be cautious there.
They will only listen to you after they lose half of their savings.
Yeah. Yeah,
and
she said, well, when she asked me, what about cash? And I shook my head and I said, I don't know about cash. And she said, well, what about real estate? I said, I don't know about real estate. And she's like, well, what about commodities? I mean, I said, commodities market's the worst of all of them right now. And we went through it all. And I said, really, at the end of the day, I mean, you have to learn to protect. You have to find the best investments you feel confident in. Target sectors in rotation. Even if you're less active of an investor, they are forcing you into stocks a little bit, Matt. this goes back a little bit to what we were talking about with the
It's
Fed
the only
as
place
well.
somebody can get anything. Yeah.
Yeah, and that's the whole point. They don't want people in these other areas, quite frankly. And I think maybe, I mean, if you're a real estate professional, and we know some of those, I'm sure they can find deals. I'm sure they can. I'm sure there's money to be made somewhere in the real estate markets. But
well, think about it
I don't
though.
know.
What you were telling your wife. Think about this. I mean, what about the people who bought property in 06, 07?
Yeah.
You know, what happened to them in 2008, 2009? You know, completely upside down. There's 2 million foreclosures out there. You know, real estate investors certainly can get their gains. You know, rental agreements and you know, real estate professionals can go find their deals. But for somebody like Raj, who, you know, is not an investor, that is not something I would recommend without knowledge. That is not something I would recommend without people surrounding themselves with people who understand how to make money in these environments. You know, and for, you know, in terms of, you know, people's retirement accounts like Roger, and Roger represents the greater consumer in the U.S. A good guy who's worked his ass off for his life, who has been successful in many capacities, who has significant retirement. And right now, that retirement is threatened. And what I would tell Roger is, I'd say, Roger, you've been successful in your life, in your business, but guess what I am? I'm very successful in mine, and my business is financial. And if you don't protect yourself, you're going to regret it. And you don't have to close out of everything. I mean, a simple protective put option, a hedge against risk. You know, even if the market goes up, you'll still make money on your long-term investments. And if the market goes down, you're not going to get slaughtered. You know, that's a good thing. And what I would tell Roger and what I tell everybody else is this. Everybody in our lives, we insure every aspect of our life. We insure our houses, our lives, our property, our cars, our boats, our cell phones. We insure everything except our retirement accounts. They don't insure their retirement accounts. And that's insane. I don't care how successful Roger is. I don't care how successful anybody is out there. I don't care. It is not appropriate behavior to have a losing mentality in the financial markets. And when you sit there and you just have money in mutual funds and ETFs and long stock, and that's all you do, you're asking for an ass whooping. That's what you're asking. You're asking for a financial ass whooping. You're asking for Wall Street to nickel and dime you to death. That's what you're asking for. You know, Raj and everybody else out there listening to the podcast, you with long-term investments, you went through 2008. You remember the volatility. You remember the pain. You remember the fear. Well, what do you think we're going through right now? That times two. Because that's what the debt in society is driven up to. This thing is not going to have a soft landing. It doesn't mean it won't go back up over time. But you cannot tell me that this is going to be the first market that lasted bullish forever. It might not crash right now, guys. It might find a bottom right now and go right back up. It is currently at support. You're on a 10% correction. It could find support and go right back up. But whether it's now or 6 months from now or a year from now or 2 years from now, this thing will crash. And it will crash spectacularly. Now, just right now, people with long-term investments, they have greater risk right now than they've had since the beginning of 2008. And if you're just not, if people are not going to protect that because they've had other successes in their life, that's on them, Tim. At the end of the day, that's on them.
Well, and here's something else to remind people out there, and this is a hard thing, and I talked to my class about this back when the markets flash crashed in August, is that in your time, it's going to feel like nothing's happening at times, Matt.
No,
and I think patience, when you become an active, to develop patience as a new trader is very hard. And that's why when you are a new trader going through your first bear market, you start getting convinced of all these new realities. And I get that. But even just think about from then till now, Matt, we are now retesting the lows or very close to it. It's 6 weeks or 5 weeks. It took 5 weeks of time. For a trader to wait for those trades to materialize is very difficult. Dean, I see you yelling on Twitter all the time. It can be difficult to be patient, right? And to believe in your core philosophy.
Yeah. Well,
Yeah.
something that just to speak to the same point that you're making about your father-in-law there, Tim. Um, so, about a week or so ago, I sent out a mail message to my non-trader friends saying, you know what? If you have investments that have a profit right now, I would really strongly suggest you take it. And there were 3 people that replied to me out of probably a list of 100 or so. 3. And some of them said, okay, thanks. Some of them said, well, what do you suggest I do? And I gave them my opinion. And some of them said, oh, I've already taken care of it. I'm already in cash, and I'm just going to wait for the market to settle out. And so, and that was one person that said that. This other person that I've known since high school, and he trusts what I have to say, and I trust what he has to say, and and he's a shrewd individual and wouldn't just let his money just go pissing away. But anyway, so to get back to the point about distractions, and it's hard. So I sent the mail message out to, I don't know exactly how many people are on that list, but at least 100. Got the replies. About a week or so later, somebody talks about water on Mars, and within 2 hours, there were like 11 replies to it. And I'm kind of going, you know what, guys? And I was thinking this, and I didn't really want to get into it, because it's their money. It's really, honestly, their money, and if they don't care about my opinion, or at least they don't care that, I have been paying enough attention to realize that, hey, you guys need to pay attention to this. And if nobody does anything, you know what? I'm going to wait until I get rich. And then I'm going to say, well, look, I told you so. And I'm not going to be happy about saying, I told you so. But I am going to be really fucking mad is what I'm going to be. And I'm going to be, come on, what the hell? I gave you the golden ticket. I basically figured out the markets for you.
Well,
you
here's
still
the problem, Dean. This goes back 3,000 years to what Plato talked about, and I don't want to been waxing philosophic all day, Matt. But Dean, if you have truth and you go back and you tell the people chained to the bench, hey, I've seen this truth. They don't want to hear that. Not only will they not want to hear that, they're going to kill you thinking that you are a lunatic, right? That's what Plato talked about. Yeah.
Just ask Socrates.
Yeah. And it's...
Dino, all you can do, because I agree with Tim, you can't force people to take action. I've been an educator, a teacher for a long time now. You can never force people to take action. They either want it or they don't. And all you can do is give them an opportunity to take action. And if they make a conscious choice to not do anything, or if they make a choice to say, Dean Beckette, you're insane, that's their choice. And if they after the end of that, though, if they do get slaughtered in the next bear market, they give up all rights to blame anybody else. They can't blame the financial advisor. They can't blame the hedge fund. They can't blame Wall Street. They can't blame the institutions. They can't blame the central bank. They can't blame the government. They have to look themselves in the mirror, and they have to accept personal responsibility because they had a chance to do something about it, and they refuse to do so. Okay? There are some people in life that just will refuse to act. Okay? That's just how it is. And you know what? 1 out of 100, you know what, Dino? That's the one you care about.
Like I
That's
said,
the one you reached.
high school.
Okay? So that's all you got to care about. I've always felt my responsibility was to the people that are a part of us. I've literally, I cannot count the amount of people I have talked to over the course of the last, 5 years, Dean, in terms of understanding long-term investments, protection, options, currencies, commodities. And at the end of the day, Everybody has a personal choice to make. It truly does amaze me how many people will go get loans to go buy cars and vehicles and boats and doodads they don't need. But then when it comes to financial investment, they will never invest in themselves. They will never invest in anything that actually helps them out. And you ask these people, well, what's a greater asset, knowledge or a car? And they'll all say knowledge. It's these same people that will post inspirational quotes on Facebook, but aren't exactly inspirational themselves. It's just something that is a plague in our society. People have different values, and it's not my role to tell them what values are right or what are not. From a financial status, we have an opportunity to give people hope and give people a chance. And if people want to take advantage of that, fantastic, beautiful, gorgeous. If people don't, we can shake hands and move on. But at the end of the day, we have to all accept personal responsibility because that's all we have. That's all we have. We live in the greatest country that has ever existed, in my estimation. We live in one of the most financially free countries that have ever existed. We live in a country that has personal freedom. That doesn't mean we're the smartest. It doesn't mean we read the most. It doesn't mean we're the highest educated. But Americans know how to get the job done. And sometimes, when we live in a complacent society as we do today, sometimes people have to go through really, really big pain to put themselves in a position to say enough's enough. And that is my hope, is that, number one, let's give people an opportunity to take advantage of this. But number two, my hope is that coming out of the next greatest crisis of all time, financially speaking, people actually make a decision to take back some of the freedoms that we've given away. And I'm speaking financially. For the last 40 years, people have made a conscious choice to give Wall Street their control over their retirements, and they can't retire. For the last 40 years, we've constantly given freedoms away in the name of security and complacency. And you know what? It's led to us being financially ignorant. But again, and look at American society. And Tim, you can speak to this as well. Every time we've ever been hit, okay, anytime we've ever been punched in the face, I'm talking financially, I'm talking economically, I'm talking, militarily, politically. Any time America's been punched in the face, you know what we've done? We've strapped on the bootstraps a little tighter, and we've went out there and we've kicked ass. And I do believe the American spirit is still intact, and I do believe that we'll come out of this financial crisis a better people and a populace that will start saying enough is enough. But that's my hope.
I don't know, Matt. You might have more optimism towards that than I do. I do believe the American spirit is definitely there within groups of people and within individuals. But I look at a generation of people that are not saving, they're just spending, they're on their phone, they're disconnected.
Well, Tim, the only generation that is our generation. That's the only generation that you're talking about is Generation X that Dean and you and me are a part of. The baby boomer generation was a saver's generation, and you know what? Our children's generation is a saver's generation. The millennial generation is a saver's generation. 86% of millennials save money, Tim. 86% of millennials save money because they watched their parents get their asses handed to them financially in 2008 and 2009. They saw what the financial ignorance of the American consumer did to our generation and the baby boomer generation, and they 86% of them save money. What we have to do, and what I believe we all have a responsibility to do, is to make sure that generation starts to get financially educated, becomes financially literate. Because if you want to cure the debt problems, let's get back to some fundamental principles of investing. Number one, let's get back to some economic realities of classic liberalism, and let's start having more immigration. We need immigration. We need people coming into our country to work. We have did you guys know we're right now at a record number of job openings, but the average American won't work there because they're too good for it? You know who will work there? Displaced immigrants. That's who will work there. You want to exactly. You want to look over there in Europe with what's happening right now with the immigration out of Syria. You currently have like literally millions of people coming into Europe trying to find work, trying to get away from what's happening in Syria, and Greece won't let them in. The Northern European states won't let them in. You know who is letting them in? Germany. Germany, one of the most financially solvent and economically solvent countries, because they know these people will work. They will go to work. Greece right now, and I saw this stat. Greece, in Europe itself, you need the average woman to have 2.1 children. Every European nation is underneath that level to maintain population. You need people to come into your country to work. Greece, wake up! You have a debt crisis. People are not working, and you have people willing to work and not be part of the 75% of government subsidies.
Right.
I mean, we need these types of things, but you know what? Let's just say the word terrorist, and everybody goes batshit crazy.
No. Oh, something I read in 2013 in The Economist. Okay, so this is 2 years ago I read this, talking about immigration. They were talking about the 11 million illegal immigrants in the United States. And they're just talking about our problem. They surmised that if those 11 million people were made citizens the next day and started paying taxes and doing all of the things that, legal residents of the United States do, that it would have added $0.9 trillion to GDP. $0.9 trillion. And they weren't talking about that.
Well, and I agree with you, Dino. But the problem is they will not make enough money to actually reach tax thresholds. See, a single individual in America making $25,000 or less doesn't pay any taxes. A couple making $50,000 a year doesn't pay any taxes. 40% of all Americans are underneath those thresholds, which means 40% of Americans aren't paying any taxes right now. And so I agree 100% with you, but we need to make that actually work. We need people we need tax reform is what we need. And I don't know if we're ever going to get that outside of just, Republican debates. But wow, what a podcast, guys. I mean, look at everything we covered. Bear markets, multiple time frames. Oh, and I didn't forget about the most disconnected group of all, and that's consumers. Consumer confidence numbers spiked at 103 today, second highest number since the Great Recession. What the hell, consumers? The market is down 10%. People can't find work, and the entire world is melting down, and you are still spending money. You are insane. Wow. Wow.
Consumer confidence, Matt. It's really high when you're fat, happy, and not worried about it. Yeah.
Well, Americans. No, I'm not going to say that.
Well, I will say this.
Anyways, last thoughts, guys. Last thoughts.
This conversation leaves me at the same position I've found myself many times in my life, which is this stuff is fascinating, it's interesting, but at the end of the day, I need to impact my life, my family, the people around me within direct contact. And I think that's a mindset I personally have embraced a long time ago. I'm an entrepreneur. I'm a business person. I'm an independent type. I always have been. And I know there are big issues that you can't avoid. I am a voter because even though for a long time, Matt, I didn't believe in voting because I thought, they're all a bunch of loons. I do believe you have to engage in these discussions.
I like that.
Because I think it's important. And I think it's important that we're talking about it and thinking about it so that we can come up with some kind of an idea for a solution here. I don't know if the presidential political process is exactly helping that right now, but at least people are talking about it. I think the marketplace is going to be very complicated moving forward. I don't think it's as simple as
you brought up Facebook.
Yeah.
I think we can make I think we could sum up the entire world poverty issue, the debt crisis, every problem in America by doing everything by doing the one thing that everybody on Facebook says: just blame Obama. That's all we have to do. That is a cure to all evils in America today. Blame Obama. You know. Yeah. Oh Lord Almighty.
You and I live in a place that does not exactly support that, man.
No. It makes me want to go back and support him after I read Facebook for just, I was a Obama. Many people know this on the podcast. I was a strong Obama supporter for years. And, I stopped supporting him about 3 years ago. It has nothing to do with people who blame our economic problems on Obama are flat out ignorant. People who blame Obama for our debt problems are flat out ignorant. People who blame Obama for the world poverty crisis and American companies outsourcing jobs are flat out ignorant. That dates back to the early 1980s, and Obama wasn't even in politics back then.
I don't think you're necessarily ignorant if you blame him for foreign policy problems that are happening.
Oh, and don't get me started. You know my take on that. Don't you? We're at the end. You can't drop a bomb like that and at the end of a podcast, Tim. I have at least a 10-minute soapbox prepared off the top of my head about how pathetic of a statesman that President Obama has been over the course of the last 4, 5, 6 years. He's made America an isolationist country again. So when I say I don't support Obama, I'm not actually talking domestic policy. I am talking foreign policy.
I'll tell you what, though. Did you watch the Republican debate? I will say this. You know that guy, who's the guy from Ohio? Is it
There's a couple
the
old guys there, Tim. We're talking Republicans.
Dennis Kucinich.
No,
I think it's Dennis Kucinich.
Say it again, Dean.
Kucinich?
I think so.
Kucinich, that's right. Kucinich said something so smart about the Iranian thing because all the Republicans are basically like, we're going to tear the deal up. It's a horrible deal. It's the first thing I'll do when I get into office is I will rip up this Iranian deal because it's just funding terrorism from the Middle East and on and on and on and on. We've all heard their position a million times. And Kucinich said, that's ridiculous, guys. I've been in politics a long time. I bring the experience and the common sense here. You can't go to your friends in Europe and say, well, we tore up a sanction we just gave them. If they violate the sanction, now we have the support of our allies, and we can do something with it. The reality is just making these big blanket statements just shows all of your inexperience in the area.
I'll tell you this. I have been on record on the podcast and coaches' shows. I do not support the Iranian deal. I think it was a bad deal. I think it was a mistake. I think it puts pressure on our allies in the region. I would not have done the deal in the first place. However, you cannot say on my first day of office I'm ripping up that deal. You can't do that.
That's stupid.
No. You can't. That makes no political sense. So now the deal isn't signed. You have to manage it. That's what Kucinich is talking about. You have to manage it.
I think Twitter's going to blow up right now, by the way. Edward Snowden is back on Twitter.
Awesome.
Oh, my gosh.
Oh,
yes. I don't know if he was gone, but he only has like 2 tweets. Yeah, we do need
more people like Snowden
in our lives.
Yeah, we need more people that are willing to go out there.
5 new tweets today.
5 new tweets? What do you have to say?
All right. Let's see what was so important. He said, can you hear me? We've got water on Mars.
Snowden, we already know all those things. Come on, give us some good detail. All right, everybody, you've been listening to the Trading Justice podcast presented by Tackle Trading. Get in the game over there with TackleTrading.com. One trade at a time, changing lives, improving the financial literacy and confidence of people, consumers around the world, not just here in the U.S., because people around the world need it as well. Tim, the one thing I've always realized is that we are all similar. We all want better things, and we all need to start hating the central bank just a tiny bit more, and we'll help you do that over there at TackleTrading.com. Guys, you've been listening to Trading Justice, the 5-star rated financial trading podcast. If you like the podcast, go over there to iTunes, give it a nice little 5-star rating, and if you don't like the podcast, just download it. You don't have to listen to it. I'm Matt Justice, my co-host, cohort, Tim Justice, and our special amazing guest, Dean Beckette. We're out. See you next time.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.